Welcome back, YouTube financial enthusiasts. Today, we're diving into the fizzy world of the Coca-Cola Company, where the bubbles aren't just in the drinks, but also in the financial metrics. So grab your popcorn, sit back, and let's unpack the story behind the world's favorite soda giant. Let's start by crunching some numbers, shall we? Strap in for a roller coaster ride through the metrics that make Coca-Cola tick. Picture this. Folks, the price-to-earnings ratio over the trailing 12 months is dancing at 24.01, with an average over the last 5 years shimmying at 24.64. That's one metric with some serious consistency. Looking into the crystal ball, the forward PR is a cool 19.76, giving us a peek into Coca-Cola's potential future earnings. Hold on to your hats because the price/earnings to growth or PG ratio is soaring at 3.87, indicating a possible overvaluation to its growth prospects, because remember that a value around 1 is when a stock can be considered undervalued. With insider ownership at 0.62%, it seems the real Coca-Cola aficionados are keeping their cards close to their chest. Get ready to applaud because the return on equity is dazzling at 42.82%. While return on assets and return on invested capital are making waves at 11.25% and 18.4%, respectively. Coca-Cola's got that Midas touch. These numbers suggest how efficiently Coca-Cola uses its shareholders' equity and company assets to generate earnings. Speaking about earnings, with an earnings per share or EPS of 2.69 and an EPS growth projection for the next 5 years at 6.21%, it's raining dollar bills over at Coca-Cola HQ. Hold on to your hats because it's been a wild ride. Over the last 9 years, EPS and free cash flow per share have been as steady as a ship in a storm, with a compound annual growth rate of 3.12% and 2.08%, respectively. With a dividend yield of 3.29% and a 5% growth over the last decade, Coca-Cola's dividend game is strong, earning it the coveted title of Dividend King with 61 consecutive dividend increases. However, the free cash flow payout ratio is on the limit of 80%, and in the next years Coca-Cola needs to improve their free cash flow to at least keep its dividend. Now let's continue with margins. With an operating margin and profit margin are waltzing at 28.17% and 23.36%, respectively, showing that Coca-Cola knows how to turn syrup into gold. It's been a tale of twists and turns over the last 8 years, with earnings and revenue taking a dip until 2020 before bouncing back. But hey, that's just the stock market for you, always full of surprises. This situation has not been reflected in Coca-Cola's market price since it has obtained a lower total return than VO during the last 5 years. With a debt-to-equity ratio of 1.67 and long-term debt-to-equity at 1.41, Coca-Cola's financial health is as steady as a caffeine-free soda on a summer day. The average price return over the last 52 weeks has been a bit of a bumpy ride at -5.46%. But hey, what's a roller coaster without a few dips and loops? And with a market cap of $256.56 billion, Coca-Cola isn't just a beverage company. It's a financial powerhouse. Finally, analysts predict a price of $66.10 in the next 12 months, representing an upside of 11.5%. But hold your horses because our very own financial analysis suggests a fair value of $55.72, hinting at a potential overvaluation. And there you have it, folks, the Coca-Cola Chronicles in all its fizzy, financially savvy glory. Remember, when life hands you lemons, make sure to add a splash of Coke and watch the profits roll in. If you enjoyed the video, don't forget to like, share, and subscribe for more financial adventures. Until next time, happy investing.